In this video, I'm going to talk about the 5 best penny stocks to buy right now. One of these stocks has the potential to not only double your money, but is led by a CEO who has previously turned penny stocks into billion-dollar companies. This is a must-watch video for anyone who is serious about penny stocks in 2024 and looking for the next parabolic penny stock. Now, we have a lot to get through in this video, so I'll try and keep the intro short. But if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 300 likes on this video. Help me achieve this goal. I want to point out this is not financial advice. I'm not a financial advisor, so always do your own due diligence. Try answer the question at the end of this video. Now let's get into it. So the first stock on the list today is SiriusXM. This stock has just hit the headlines in the past 2 weeks because Warren Buffett's Berkshire Hathaway has just bought a major position in the company. So what is SiriusXM? SiriusXM is a leading audio entertainment company in North America with a portfolio of audio businesses, including its flagship subscription service, SiriusXM, the music streaming services of Pandora, an expansive podcast network, and a suite of business and advertising solutions. This has a combined monthly audience of approximately 150 million listeners. SiriusXM offers a broad range of content for listeners everywhere. They tune in with a diverse mix of live and on-demand programming across music, talk, sports, and news. Now, overall, this doesn't look like the most exciting company in the world, but then again, the companies that Warren Buffett invests heavily into rarely do. However, he is considered the greatest investor in the world, and his investments do very, very well. So why buy Sirius now? Well, it looks like SiriusXM is making big moves in the industry. In a deal just this week, SiriusXM signs Alex Cooper from Spotify to SiriusXM in a $125 million deal. This is a major deal and a sign of intent from the company. Alex Cooper's Call Her Daddy has been the music streamer's #2 original behind Joe Rogan's Joe Rogan Experience. But this is just the latest deal. In January, Sirius signed a 3-year, $100 million deal with Smartless founder Will Arnett, Jason Bateman, and Sean Hayes. In 2022, there was major deals involving Conan O'Brien's Team podcast. They also signed Ashley Flowers' Audio Chunk, and many other productions such as Kevin Hart, Tom Brady, and Howard Stern. Looking at the investor's presentation, Sirius is looking to be the dominant future of audio. They already have massive artist and brand exclusives and consider themselves to be a leading subscription business for the future while expanding their audiences. The company is consistently delivering strong results and a good capital return, although the return on capital had dropped last year. So as I said, Berkshire Hathaway more than tripled its stake in SiriusXM during the second quarter. Warren Buffett now owns a $400 million position in the media giant. But media mogul John Maloney is the largest shareholder of SiriusXM, and folks can grab a piece of his controlling position through ownership of Liberty Sirius Group tracking shares. Liberty SiriusXM Group investors will vote at the end of this week to see if they want to combine their shares with the more widely owned SiriusXM common stock. If the vote is successful, and it likely will be given Malone's backing, and the fact that the shares trade at a discount to SiriusXM, the transaction will be finalized on September 9th. This will make Warren Buffett the largest shareholder of the company with 33 million subscribers and more than 150 million listeners. A company doing over $9 billion in annual revenue with a serious return on capital investment. In a way, Warren Buffett's interest in this stock makes a lot of sense. Looking at MarketBeat, we can see that Sirius is covered with several analysts and has a consensus price target of $3.80, while the high forecast is $6.50. 3D Capital is a Canadian-based venture capital firm focused on opportunistic investments in companies in the junior resources and disruptive technology sectors. First of all, 3D have several very interesting early-stage companies in their portfolio. 3D Capital provides investors with significant exposure to ground floor opportunities in small cap stocks in their very early stages and in disruptive industries such as blockchain, artificial intelligence, Internet of Things, biotechnology, and junior resources. And the company explained this very well on their website by saying that 3D can provide exposure into equity in early or seed financing rounds, and this provides 3D with a low entry point and highly favorable risk-reward profile. Now, a few things really stand out about 3D Capital and caught my attention about this company. 3D have investments into many companies such as the ones we can see here, but first I want to talk about what I consider to be the most important thing. 3D Capital is led by CEO Sheldon Inwentash. As it says here, Sheldon has more than 30 years of successful small capital investing experience and an extensive track record of achieving significant ROI for his investors and profitability for the companies in which he invests. This is a CEO with a track record. His last venture capitalist company was Pine Tree Capital. Everybody is always looking for the next penny stock that can double their money or maybe 3x their investment, but this guy generated a 15,000% return in just 3 years. That's a 150x return. While at Pine Tree Capital, his accomplishments included investing in Queenston Mining, which was acquired for nearly $500 million, Aurelian Resources acquired by Kinross for over $1 billion, and Gold Eagle Mines acquired by Goldcrop for $1.5 billion. In 2007, he was also named as a finalist for the Ernst & Young Entrepreneur of the Year award, so as I said, his track record really caught my eye. As of the start of this month, 3D Capital has a net asset value per share of 86 cents. That is 4 times what the stock is trading for right now, with the current price only 21 cents. And 3D Capital have just announced closing a deal where 3D have acquired 3.2 million common shares of Sariel Diagnostics at a price of 5 cents per share. In consideration, 3D has issued an aggregate of 200,000 common shares of the company at a deemed price of 80 cents per common share. Remember, 3D Capital stock is trading at only 21 cents right now, far below their NAV value. SoundHound AI is a global leader in conversational intelligence, offers voice AI solutions that let businesses offer incredible conversational experiences to their customers, with best-in-class speed and accuracy in more than 25 languages to product creators across automotive, TV, Internet of Things, and customer service industries. SoundHound has several AI-driven products like Smart Answering, Smart Ordering, and Dynamic Drive-Thru. Along with SoundHound Chat AI, a powerful voice assistant with integrated generative AI, SoundHound powers millions of products and services and processes billions of interactions each year for world-class businesses. And we can see here those leading companies such as Samsung, Oracle, Square, and even Nvidia are amongst the leading brands that chose SoundHound AI. Looking at the most recent investors presentation, SoundHound is estimating their current addressable market at approximately $40 billion. And we can see here how the business has been growing rapidly over the past few years. SoundHound also has strong patent protection with over 270 patents across a number of different categories that are listed here. And financially, SoundHound AI has been going from strength to strength over the past few years with over 50% compound annual growth rate since 2020. Now, this stock really caught attention earlier this year when Nvidia disclosed that they were holding several $1 million worth of SoundHound AI stock. And SoundHound AI shares are soaring recently on acquisition news and strong revenue growth. The company recently acquired Amelia AI for $80 million. Amelia is known for its generative AI platform that helps with customer service and back office tasks. But the acquisition will help SoundHound move into other industry verticals such as financial institutions, insurance, retail, and healthcare. The company said the deal will also unlock a lot of new cross-selling and upselling opportunities, as well as new avenues for monetization. The combined company is projected to generate revenue of more than $150 million next year, with Amelia contributing over $45 million of the total. Following the deal, it will have $160 million of cash and $35 million in debt on its balance sheet. Looking at MarketBeat, we can see that SoundHound is covered by 6 analysts, giving a consensus price target of over $7, with a high forecast as high as $9.50. Before we go any further, if you're enjoying this video, then smash the like and consider subscribing to the channel. Which of these stocks so far is your favorite? Drop a comment below, but the next 2 stocks might be the very best of the lot. One of these stocks has just got a 10x price target set by leading Wall Street analysts. ChargePoint Holdings provides EV charging networks and charging solutions in the United States and internationally. The company provides comprehensive solutions for any size fleet and is fundamental to the build-out of global EV charging infrastructure. ChargePoint offers a portfolio of hardware and software and services that provide an end-to-end solution for EV charging needs of all varieties. The company serves the commercial fleet and residential markets and lays claim to a network of more than 18,000 EV charging stations and is growing. When it comes to EV fueling, ChargePoint is the big fish. They have 7 times more market share in network level 2 charging than the closest competitor in North America, and 74% of the Fortune 50 list companies rely on ChargePoint. Looking at the investors' presentation, they have a massive expansion across the US and Europe. They sell hardware, subscription software, and services, and have a massive list of partners across these services. Looking here, we can see how much the spend has increased over the past 6 years, and that the company is expecting gross margins to return to healthy levels again. But for now, the revenue from charging systems has dropped a bit, due in large to EV sales. This article says that ChargePoint stock is the hidden gem in the EV sector's turnaround. By focusing on higher margin software, ChargePoint stock could take off as it will let the company expand profitably. ChargePoint is the leading provider of electric vehicle charging infrastructure but faces declining sales as demand for battery EVs gives way to consumer preferences for hybrids. A public charging network is less critical if you use gas to get where you want to get to and charge up later. ChargePoint stock reflects the decline, down 70% over the past year, but a huge opportunity does exist. When we look at market beat, we can see that ChargePoint is well researched by Wall Street analysts who have given the stock price targets of as high as $17, but also as low as $150. The average price target is $688, which gives upside of about 150% from the current price. The most recent price targets that were set in the past 2 months, and all of these rate the stock as a buy, with everyone rating this stock as a $3 stock. Remember that the stock price is under $2, so there is a lot of upside scope for gains when the EV market is slightly more favorable. The next stock on the list caught my attention after being given an insane 10x price target and recent insider buying, but this is just the tip of the iceberg. Fortress Biotech is a biopharmaceutical company that develops and commercializes pharmaceutical and biotechnological products. The company has 7 marketed prescription products and over 20 programs in development at Fortress and at its partners and subsidiaries, in which it holds significant ownership positions. Fortress portfolio is being commercialized and developed for various therapeutic areas including oncology, dermatology, and rare diseases. Their model is focused on leveraging its significant biopharmaceutical industry expertise and network to further expand and advance the company's portfolio of product opportunities. They have established partnerships with some of the world's leading academic, research institutions and biopharmaceutical companies. Now, looking at the company's recent investors presentation, we can see that they have a number of products that are already marketed, as well as having upcoming catalysts and PDUFA dates. I highly recommend everyone to check out this investors presentation, so there is a link to this in the description below, because this goes through all the upcoming milestones, as well as a portfolio of products in the late stage, mid stage, and preclinical stage. Now, as I said, what caught my attention with Fortress Biotech was this insane price target. But when we look at the other price targets that have been set for this company, we can see that last year there was a price target of $75 and 2022 there was a price target of $90. So although the share price has been dropping, it's clear that analysts have had high expectations for this company over the past few years. And there has also been a lot of insider buying recently, and it's easy to see why when we look at the current pipeline and the catalysts that we have coming before the end of the year. Not only does this company have partnerships with world-leading pharma companies such as AstraZeneca, but just look at all the anticipated milestones due to come in the second half of 2024. With a mega date on November 4th, after the FDA accepted a new drug application in March, there is now a PDUFA date set for November 4th, for which Fortress Biotech owns 48%. Now, in this video, I have just looked at what I consider to be 5 top penny stocks. But which of these do you think is the best? I'm extremely bullish on 2 of these in particular. Check the comments to see which ones. But let me know which one is your favorite. Leave a comment below and rank these 1 to 5. This is of course just my opinion and it is not financial advice. There is a lot of talk building on social media about some of these stocks right now, but always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on these stocks. Remember to vote on the community post for what videos you want to see next. There is a link to this in the description below. Follow me on Twitter and I'll catch you in the next video.